Wanted to follow up on today. We did like got an A&W caffeine sugar free going on here. Anyway, let's talk about what happened in the market. Holy cow, down 475 points on the Dow Jones today. Why? Because of Chase, Wells Fargo, and Citibank all said that their profits were down. Why were their profits down? Because you, the consumer, are getting smart finally after 2 years. Took 2 years, but people are getting smart. What's happening is these banks have to start paying decent interest rates on money markets and CDs to keep the deposits in house. People were start to flee because some of these banks weren't offering competitive rates. Well, the last 6 months, I think banks finally figured it out. Actually, the last 9 months, banks have been being a hell of a lot more competitive because they realized that people were waking up. So I give you guys a big applause. Applause to you, the consumer, for managing your money appropriately and finding out those opportunities in money markets and CDs. No reason to leave all your cash sitting in a savings or a checking account when you can be making 5% or more for 6 months, 3 months. Personally, although you're not going to find this at most of the banks, you're going to have to go to a brokerage like Fidelity or Schwab or E-Trade or one of these other guys. If you go to a brokerage account, you'll be able to get a 30-day CD, and that's what I've been doing for the last 2.5 years, I think. So as the rates were going up, I just kept renewing, getting the higher rates, just keep them rolling. Now that with inflation the way it is, people were worried that come June, the Fed was going to start lowering rates. Not going to happen, folks. Not going to happen till at least maybe September if they're lucky. With as hot as inflation is on the wholesale and the consumer front, you're not going to see the Fed bring down rates at all. So, you can probably, if I'm waiting to start hearing people say, hey, maybe the Fed should be raising rates, but the banks are already kind of got their what's in a vice with the rates the way they are. So that's why the Fed is very reluctant to raise unless they really, really, really have to, because every time they raise interest rates, all those bonds and things that the banks own, certificate of hey, Jessica, thanks for joining. Doing a little finance tutorial today, I guess, teaching you guys about why the market went down 475 points today and actually had the worst week of the year. So Dow Jones was down big time this week. I don't know what the number is. GGG, what's that all about? All right. Anyway, so the Fed doesn't want to raise rates because if they do, you're going to see the banks scream because the bonds that they're holding on to are going to be worth less, and if they have to sell those, they're going to take a loss on them. And the Fed and the Treasury had a solution last year, but that expired. I forget what they called it. It was there was some program where the banks could turn over their bonds to the Fed and get a loan, face value loan for like a year, and they terminated that. So the banks can no longer do that out of the generosity of the government. They're going to have to come up with some other way to make money when they need it, and they need to manage their money a little bit better too. So that's part of the problem. These banks, if you don't realize it, Yeah, if you had 2K in a checking account, you're lucky. One. Two, I would try to get it invested in a CD or a money market where you can get some better rates. I wouldn't think your checking account's going to be offering you more than maybe 1 or 2%. You should be able to get 5% or above now in a good short-term CD or money market. So check with your bankers. And also, if you have a brokerage account with some company, check with them. They usually offer CDs. Oh, geez, yeah. They're stealing from you. Let's talk about that. Another reason why the banks were not, their profits are down is every time you let your money sit there, they're investing it. They're letting some other bank borrow that money potentially and getting 5 or 6% from that bank overnight. They can do loans. Some of these large banks do overnight loans to other banks, and they're making 5 6%. Um, so all that money that you have sitting there in savings and checking, and it's not getting, you know, interest rate that's a market rate. Like I said, right now the market rate is like 5 and a quarter. So you should be able to get some decent rates, but you just want to make sure that you're not tying up your money too long because rates may go up in the next couple of months. There's a Fed meeting at the end of the month, like May 1st, beginning of next month, end of this month. We'll see what they do. I got a feeling they're probably going to punt like they've been doing the last couple of times. But if inflation comes hot again next month, you're going to see the Fed start considering raising the rate another 1/4%, which would take it up to 5.5. Um, so there you go. But as I said, part of the reason that banks are losing their profits is they have to pay people the market rate, and they're having to put it in CDs and money markets and things that they're not illiquid to the bank. They're not real liquid to the bank. The bank's gotta leave it there and can't be investing it overnight like they did in the past. It was in checking and savings. So um, give the consumer a kudos, thumbs up. Give me a thumbs up. There's no likes up there. I see I got 5 people here and no likes yet. No likes. I'm teaching you guys about finance for a change here. So there you go. Inflation is raging. And if you're in debt, the other thing is credit card spending is up. Delinquencies on credit cards are up across the board, the various 30 days, 60 days, 90 days. All that stuff's up. All that weighs on the banks because when delinquencies are up across the board, they have to have reserves to backstop some of that stuff. So when consumers go belly up, it shows up on the bank's books, and especially a lot of Wells Fargo. Let's talk about Wells Fargo. If you guys bank for Wells Fargo, I would really think twice about it. Wells Fargo's getting their lunch handed to them when it comes to cars. They were a big finance. They had a big finance arm for cars through dealerships and car dealers and intermediate car dealers. And I watched some channels where they have auto auctions, and there's just aisles full of cars being sent to auction by Wells Fargo because they've been repossessed. If you're a repossessor, those guys are more than busy. The last 9 months, the repossession of autos are way up. And if it's not being repossessed, if you know anybody in the auto sales industry, talk to them. I thought I saw a video where it said that the 25% of new car sales the last couple of months have been underwater. where say someone bought a car a couple years ago and car prices were through the roof, and now they've decided that maybe they don't like that car, they want to buy another car, a smaller car, a cheaper car or something, or just another car for whatever reason. They got a lot of miles on it now, they want something better. Well, a lot of people overpaid for cars during the jabby jabby season, right? Jabby jabby car prices went through the roof, and a lot of people bit on that and bought cars and way overpaid for them. Car prices have dropped significantly, and not a problem unless you're going to trade it in and buy a new one. And if you owe more than it's worth, there's that middle ground there that someone's got to make up for. And in the past, some banks and finance companies would be okay about that, but now the standard now in the finance industry, especially in autos, is 140% of the value of the car. So you've got a little bit of leeway there, but you're playing with dynamite, folks. When you start financing a car over 100% of its value, it's going to come back and bite you. It really is. So there's some tips about what's going on with consumers and debt. Try to get out of debt as much as you can. My suggestion is get those credit card lines down to zero if you can. Pay it off every month. That should be your goal. Cut down on your spending. If you don't need it, don't buy it. The other thing too is the only debt you really should have is maybe one car and a house, and try to get that car loan paid off. And I always buy nicer cars to begin with because I like to keep my cars. I know a lot of people who, after 3 years, they get bored with the car and they want to get a new one. That's fine if that's what you want to do, but when you do that, you're basically losing. You're losing on that because there's value in that car that potentially you're not getting paid for. When you trade it in, you're getting the wholesale price. You're not getting the retail price, and you could be losing on that transaction. So, geez, the last 40 years, I've been keeping my cars like 20 years easily. I drive them into the ground. And as I say that, the only thing you got to be worried about driving a car in the ground is make sure that when it goes into the ground, you're not in it. So that's the fine line you got to play, right? Keep the car as long as you can. I've always said, man, if I can fix something and it's less than a car payment or two, I'm going to do that, because if I can spend $1,000 a year on a car for the last 5 years of its life and keep it going an extra 5 years, I'll do that. But that's what a lot of people don't like, getting their cars repaired. They don't understand what's going on. And as a result, they go out and they buy a new car, which costs money, guys. New cars cost money. And you gotta be a real good consumer these days, because some of these dealerships will take you to the shed, and they got add-on costs now that you would not believe. Some of these dealers, maybe not now, but in the past, the last couple of years, the big thing in some of these dealerships was a market adjustment. They were selling at invoice plus a market adjustment, and because there was such a short supply of cars, people were obliged to pay that market adjustment, which was over the inventory price. So that's over the 100%, right? People were paying more than 100% for a car in the last couple of years. Shouldn't be the case now, but lots around here, new car lots around here are chock full. Ford, Mazda, Volkswagen. I got some mega dealers that I went by in the last couple of weeks, and they don't have any space on their lots. They're parking in the places where you drive. They just got oodles and oodles of cars, and there's no one to buy them. Um, People are getting smart, right? That's what this is about today. People are getting smart. We got 5 people. We got 3 thumbs up. I thank you for giving me the thumbs up. Hope you're having a good start to your weekend. I'm doing the A&W tonight here. I just had dinner, had some broiled fish and some spätzle. Check out my videos I did. I think they're shorts the last couple of days about maybe no, I think they were actually they were vertical lives. Talked about how grocery stores steal from you. You think banks steal from you? Grocery stores try to steal from you. Sometimes you guys don't realize. I almost got taken the other day on a piece of meat. Almost lost $6 when I bought a steak. Watch that video and learn. You got to watch your money, folks. That's all I got to say. Watch your money as if it was yours, right? It is yours, and you just don't want to give it away freely. That's the problem with some people. They give their money away much too freely. And there's a lot of scammers out there looking to take it from you. So that's all I have for today. Check out our other videos. Did one this morning about the banks and the stock market and money, CDs. Talked a little bit about CD rates. You should be able to get, with a brokerage account, you should be able to get 5.3%, folks, for 30 days. That's all you have to commit, 30 days. So check that out. Some of these banks, they want your money for like 10, 11 months, 9 months. They want you to commit it long term. You can do that, but if the rates go up, you're missing that, and you got to wait like 4 or 5 months before it kicks in again. So I have a tendency to go shorter term, but we're getting at the point of the curve where interest rates, if the economy starts coming back and the government stops spending as much as they do, you're going to see interest rates level off slowly. If not, they'll probably stay the same for a while, another 3 to 4 months. But it's inflation that's driving everything right now, guys. Inflation is driving everything. I really think the Fed wanted to bring rates down at the next meeting, but with the readout they got this week with wholesale and consumer rates elevated, they can't. And if they did, it would actually cause some chaos and could result in hyperinflation, folks. And we don't want to see that. Be like Zimbabwe. I don't know if you guys are up on Zimbabwe. They basically crushed their currency, and it's crazy there. It's crazy there. They got $1 million dollar bills that are like worth $50 maybe. It's crazy. It's crazy. So I'm gonna end here. Guys, have a good night. Have a good evening. Watch what you do with your money. Watch out for those big banks, and check your bank too. WeissRatings.com. WEISS ratings.com if you want to check up on your bank and their rating, or your credit union. It's a free website. Put in your bank or credit union name. It gives you a nice report about your bank and how it's rated. A through D. A being good, D being bad. And it'll tell you why your bank is bad or why they're good. A lot of people don't do that. A lot of people don't realize you need to make sure that you don't have more than $250 in a bank, because the FDIC, that's all they're covering is $250, folks. And the FDIC could barely cover that. They really can. So over and out, DJ Wonder Chrissy. Like, share, subscribe. Hit the thumbs up for me, folks. Thank you.